conventional finance, impact investing, ESG, it's not going to get us where we need to go on climate and racial justice. Hey, it's Felipe. I want to map the cooperative and employee ownership ecosystem for you. And given that I'm thinking you're probably a co-op investor already, 120 million Americans are part of a credit union or a food co-op or a consumer co-op like REI. And as a result, I wanted to just shape what I see as emerging on the ecosystem as I've been building Community Purchasing Alliance Cooperative these past few years and started raising money to expand our co-op to new regions. I realized I've gotten to know a lot of the funders, philanthropists, impact investors, angel investors that are interested and curious in learning about this ecosystem. And I've begun to map who the players are, and I want to share that with you today. And I also want to help you see if there's something special about cooperatives, employee-owned firms, steward ownership like perpetual purpose trusts that centrally move capital into a subordinate or reciprocal relationship to other stakeholders. And I think that's vital to understand about our public ecosystem and all the stock market and other kind of public equities we hold. In all those situations, capital is supreme. Capital's interests are maximized, and we want that. It grows our capital. It's been great for these past few hundred years. But has it been that great for those most affected? People of color, frontline communities. I think if we listen and spend time and appreciate the violence and extraction, exploitation that our conventional paradigm has caused and led to, it might help us see that we might not get where we want to go unless we rethink about our goals with our investing dollars and our capital. And impact investing has done phenomenal things to get there. But I'm really impressed with Morgan Simon and her new book called Real Impact, the New Economics of Social Change. And in there, she talks about 3 principles that are super helpful. She calls them the transform finance principles. One is that we need to engage communities in the design, governance, and ownership. Think about that. How do we engage communities, the most directly impacted folks, like the coffee farmers of Equal Exchange, the coffee I drank this morning? How do we engage them in the process? And then how do we make sure, the second principle is how do we add more value as investors than we extract or take away? And that's a thing pioneered by Brendan Martin of the working world. The third principle is how do we fairly share the risk and the reward, the upside and the downside risks between communities, entrepreneurs, and investors? If we're requiring a 100% guarantee on that loan, are we really sharing in any of that risk? Is that a fair distribution of the upside and downsides? Are we putting it all on the entrepreneur, on the communities? These 3 principles help shape a lot of my imagination for how we think we can put the environment, workers, into reciprocal relationship with their capital. But we, as the investors, have to be willing to do that. And since you probably put $100 into your food co-op locally, or perhaps you are part of a credit union, you know how important those institutions are for our communities. So my question to you today is to invite you to think about where else could you be putting your capital that helps build the solidarity economy, the new economy, an economy that really moves the needle on the climate imperative and the racial wealth gap. So what does that ecosystem look like? I want to show you this ecosystem of actors that I put together here. And basically, there's a whole group of folks over here that are moving things like resource generation, project equity, truly important movement building organizations that are thinking on racial justice and anchor wealth building, the democracy collaborative, a whole new style of economic development. And the movement for Black Lives, we can't deny how much our culture has been shaped by these incredible forces. I think the other important thing is we have a huge, well-developed cooperative ecosystem already. Like I said, 120 million Americans are part of co-ops and 3 billion people globally are part of cooperatives. So we have established infrastructure to build on already, including in the United States, we have the National Cooperative Business Association, we have the National Cooperative Bank. Did you know that multifamily housing, 25% of multifamily housing across the country is a housing cooperative? Primarily New York City, DC, other major metro areas, the Cooperative Development Foundation. We have 3 pioneering co-op loan funds: Local Enterprise Assistance Fund out of Boston, the Co-op Fund in New England, has deployed over $86 million in co-op loans, shared capital out of the Twin Cities that has partnered with Project Equity to do an employee ownership fund. And then we have the working world. I mentioned Brendan Martin, who went to Argentina with Naomi Klein. Maybe you've heard the movie The Take or Shock Doctor in some of her books. Brendan worked alongside her, and they built out a network called Seed Commons of CDFIs doing inclusive lending throughout the country now in a non-extractive way, coming alongside people that are borrowers and not just think about the financial piece, but the whole picture, and making sure that they, as investors and financing partners, add more value than they're taking. And I think, to me, this is the paradigm we need to get into the mind of. But we all need to figure out what that means for us in our portfolios. I also think it's important to figure out who's pioneering the ecosystem. Start.coop is a new accelerator, pushing tons of new co-ops into their growth visions of what they want to become someday. And I'm super excited about a couple that have grown out of there. Driver's Seat is helping organize gig workers. And we know the imbalance of power with Uber and Lyft, DoorDash, and how much we've come to rely on delivery as a huge source of so much. They're taking that data and analytics and helping the drivers have a say, kind of building a trust out of that data and having the drivers directly benefit. And so that's the most affected community by these huge platforms and algorithms. And the new kind of economy we're in, where we need to rely on this so much more. So they're taking that, shifting the power dynamics, and actually building something to make more income for workers. So it's a worker-owned co-op, kind of come out of Start.coop. There's many more. We've graduated 16 already. And the Equitable Economy Fund is a new fund paying 5 to 8% returns. We have about 5 million. To about 2 million target right now. So it's investing in some of these early stage, growth-focused, inclusive economy-focused cooperatives. Zebras Unite is a movement. 4 incredible women have come together to cast a new narrative, and it's wonderful. Let's not seek billion-dollar unicorns that just benefit one person or the super elite. Let's exit to community. And zebras run in herds, and so how do we support each other in that work? And they have this great new manifesto called Labor and Delivery, Birthing the New Economy. And it helps structures a new way to think about how we can all work together in the ecosystem. And they've actually decided to structure themselves as a multi-stakeholder cooperative. So make sure you check Zebras out. And they formed this inclusive capital collective with common future. Another frontier is an investment cooperative, Quechua Impact Fund. And it's basically a real estate investment trust combined with a mutual fund, a diversified bunch of assets. And then Blake Jones, the founder of Namaste Solar, a worker-owned co-op that's now grown to more than 120 or 150 workers now, I believe. He's leading the Quechua Impact Fund, a $25 million fund that provides this very interesting diversified set of opportunities in non-extractive impact real estate and impact investments. The Candide Group, Morgan Simon, has become on the map significantly this past year because of their work with private prisons and helping us divest from private prisons that profiting on incarceration. I also want to recognize RSF Social Finance, such an important player in this space because they're helping us rethink banking, the relationships. They have a community pricing gathering where they set the interest rates. They bring investors and borrowers together to say, should we increase it or decrease the interest rate this quarter based on things? And it's fundamentally inserting relationship back into our economy, which is something I didn't appreciate until Marco Evangelisti and the slow money movement helped me realize how artificial and distorted our conventional finance system has become. And to illustrate that, let's just take our global GDP, for example. About $75 trillion is the global GDP today. But guess how much just travels through our stock exchanges every day? It's something on the order of 1,200 trillion. So it's multiple orders of magnitude, or a couple orders of magnitude higher than the total goods and services. So our GDP is the goods and services produced. That's the actual real value of the created. But the amount of money that gets exchanged, because of the intermediate nature and secondary markets and derivatives, so much happens every day that we have this kind of artificial economy. And that's part of the decoupling we've seen, I think, since the pandemic, when the stock market crashed in March, April, which would kind of resemble the reality of all of our lives, kind of got totally disrupted. But because of the Fed and monetary policy, and this is not fiscal policy, we just had 1.9 trillion through our Congress, but 3 trillion were invested through the purchasing of assets by the Federal Reserve in April of last year. And that 3 trillion, just for context, that's more than the value of all the farmland in the whole United States. About $2.7 trillion would be the relative cost of the 900 million acres of farmland in the United States. So think about how much capital, how much was purchased by the Federal Reserve. that now sits on the balance sheet and created this situation where our stock market has gone really well this past year. Incredible. And companies are buying back shares. And so I think we're in this super interesting place where we've disconnected. There's this total decoupling of the well-being of our lives and our lived reality and our communities and people on the ground and financial markets and where that's going. And that decoupling, I think, helps us realize some of the complexity that's been injected in the system, that all the intermediaries. So how do we build a relationship to what the actual economic activity is at our local businesses, our local entrepreneurs, the people that are actually hiring folks? And I think RSF Social Finance gives you a tangible way to experience being part of a banking community by being at the table. So anyway, I just went off on a tangent there, but they're an important ecosystem player. And then on the employee ownership side, we have large private equity folks like Pete Stavros from KKR has decided to give 20 million of his own money to build an intermediary for employee ownership. And I just think it's crazy to think how that could reshape the ecosystem and whose interests are at play. Purpose Ventures is doing this steward ownership, perpetual purpose trusts. And then there's mission-driven finance, providing infrastructure to small funds, Mission Investors Exchange, Impact Alpha's reporting, Impact Finance Center. Dr. Stephanie Gripney has built these investment clubs to help gather like-minded people to shift their money. And we have all kinds of, faith-based partners as well. So there's an ecosystem out there. And I wanted to let you know that you are such an important part of this community. And I want to invite you to think about what journey you are on with your money and what you're hiring your money to go do. And are you really hoping to perpetuate the system of capital supremacy that puts your money and my money ahead of all the other interests, ahead of the workers, ahead of the communities, ahead of the environment, ahead of long-term global sustainability? And of course, our ESG investing scores are trying to rank companies differently. And of course, we're trying to make incremental progress. But at the end of the day, the fiduciary is to that capital. And unless we have a governance and ownership structure that reflects other stakeholders that actually have control to put capital into reciprocal relationship to other stakeholders, I don't see a path that we're going to fundamentally shift the direction we're going. And that's why I've decided to shift so much of my money into cooperatives and employee-owned firms. And I want to invite you to think about where that might lead you. I've just led a workshop for a group of Catholic impact investors. We had about 10 CFOs and other associations, and they were impressed with how much is emerging on the employee ownership landscape, from Apis and Heritage Capital Partners to Southeast Acquisition Partners to Mosaic Capital Partners, who has been doing ESOPs for many years and very well established. They are building wealth for workers, especially communities of color with Apis and Heritage. And it's an opportunity for us to think about the real pathways to do things differently. And we all know that home ownership is a clear way to build wealth. Business ownership is also a way to build wealth for a few. But unless we have broad-based wealth building inside of our economic institutions, our businesses, I don't know how we're going to significantly change the way things are, or the way things are going. So I invite you to think about that and help me continue to grow this conversation. We're launching Ownership Matters, ownershipmatters.net, a newsletter to help make sense of this growing landscape, tell the stories of people on the move. Look forward to having you join us.